Milan, since we are now done with the collection from debtors and your cash sales, we are going to get into creditors payment. Please note that they said the markup is 50% on cost. And in number 6, they say the business maintains trading stock at the December 2021 value. And it's a fixed stock base. That's what they're simply saying. It's a fixed stock base. Immediately when they tell you that the entity maintains a fixed stock base, it means that your cost of sales value will be equivalent to your total purchases. They only said here, creditors allow the business 90 days credit. Those credit terms will be complied with, meaning that we can only pay our creditors after 90 days, which is after 3 months. And you always focus on what was paid during your budgeting period. First of all, I'm just going to quickly calculate my purchases by finding cost price. So you need to go back to this and calculate cost of sales. So it will be 300 times 100 divided by 150, 320 times 100 divided by 150, 340 times 100 divided by 150 to get cost of sales, which is also equivalent to your total purchases. Once you have calculated cost of sales, which will be equivalent to your total purchases, this is what you will get. Excuse me for that. So you will start by taking these values here and simply calculate cost of sales. $300,000 times 100 divided by 150, it'll give you 200,000. 320 times 100 divided by 150, it'll give you 213,000. 340 times 100 divided by 150, it'll give you 226,667. Round it off to a fullest, to the nearest rand. And these cost of sales values also represent total purchases. And these will be your total purchases. %10 of those total purchases will be your, it's not 10%. How did I miss that one out? It's 20%, which is this one here. 20% of your total purchases will be cash purchases. So just take all your purchases, times them by 20%. That will give you your cash purchases. The cash purchases that fall into the budget period from January to June, you take them straight to your cash budget under purchases. and the payments, that is. That's it. However, once you have calculated your credit purchases, you need to go back and read the terms and conditions. We only pay after 90 days, meaning that the October purchases will be paid in Jan. The November purchases will be paid in its 1, 2, 3 in Feb. And the December purchases will be paid in March. The Jan purchases will be paid in April. And the Feb purchases will be paid in May. March purchases will be paid in June. That's what it means. Here, it was just me showing you how to calculate cost of sales. There were no discounts, therefore you just write the purchases as payments to creditors. And this is what you will have. You will first take your total cost of sales multiplied by 80 if it's not given to you, and these will be your purchases that you are going to have. October, as I've said, will be paid in Jan. November will be paid in Feb, and these are the payments you'll need to make to your creditors. Now, these payments to creditors, we are going to record them as such, as payments to creditors under payments. That's it, people. Let's finish this off. Number 9 says variable expenses in respect of advertising and selling expenses amount to 1% of turnover are paid in the same month. Turnover is total sales. You are just going to take all your total sales. You only focus on the budget period. For Jan, take that 288,000 times 1%. For Feb, take 280,000 times 1%. For March, that 304,000 times 1%, and April is 328,000 times 1%. For May, it's 312,000 times 1%. And for June, it'll be 280,000 times 1%, and that will give you your variable expenses. Turnover is sales for now. Just remember that. When you get to varsity, it will be something totally different. Well, not totally different, but they will just add a couple of things to your turnover. Now we've got number 10 says that interest on the loan amounts to 14%. Outstanding loan amount on the 1st of January 2022 was 500,000. First of all, that transaction says nothing about interest on loan being paid. We were going to find monthly interest and record it in our projected income statement. But this one here, we can't record it in the cash budget because nothing was mentioned about the interest on the loan being paid. Therefore, we will not record that in our cash budget. Number 11, tax worth 14,000 and dividends worth 50,000 owing as per the balance sheet will be paid in January 2022. They're telling us that we are going to pay 50,000 in respect of dividends and 14,000 in respect of tax. And all of that will be paid in Jan. So you just put it under Jan. Number 12, 110,000 provisional income taxes to be paid at the end of June based on the forecast income statement. We are going to just put that under June, that is tax. 13 says at the end of June, an interim dividend of 20 cents per share must be paid on shares held on that date. and we had 850,000 shares held on that date. So those two amounts will be recorded under June under payments in the cash budget. Now I'm just calculating my interim dividends for June. Its number of shares issued were 850,000 times it by 20%. It gives me 170 that will be recorded under June under the payments in your cash budget. The other one was tax, the other one will be dividends. Add all your payments up and this is what you will get. Now calculate whether you made a surplus or deficit. I will start with Jan. I will take my total receipts value, which is this 300,456, and minus my total payments value, which is this 265,280. If it's positive, it'll be a surplus. If it's negative, it'll be a deficit. For now, it is a surplus. Then you take your surplus for the month, you add it with the opening bank balance of 80,000, and that'll give you a closing bank balance for that month, which will be 115,176. Do the same thing for Feb. Take your total receipts, which is 274,780 minus your total payments of 210,800. You will get a surplus amounting to 63,980. Your opening balance for Feb will be Jan's closing balance. So your closing balance for Feb will be the opening balance plus your surplus for that month. Then you do the same thing over and over again. For June, to calculate your surplus, you will take your receipts for June, which is 284,824, and minus your payments for June, payments for June will be 482,266. Your payments there are greater than your receipts, resulting in a deficit. Your opening bank balance for June was 442,168. Now take that negative 197,442 added with 442,168. It'll give you a closing balance for June, which will be 244,726. That's it. Now, this is what we'll have for classwork 2. This is a past paper. I just don't remember where I got this paper from. That's why I couldn't credit that. So we've got to prepare this and this and this. All right. And then you can try this one as well. It's question, well, I don't have the question number here, but it is in paper 2 of the November IEB exam 2021. And also try out paper 2 of the November IEB exam 2020, and you can try all the papers too. All the paper 2s from IEB exams. And that's what we will be doing in the next coming videos. Try those ones out. Thank you for watching. Please don't forget to subscribe. Please press the notification button and let everybody know about this channel. Khutsum.